What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about in today's video is NZD USD. Now, why do I want to speak about NZD USD? Because this pair is very near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we have. And as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup on this pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly to the 50% of the Fibonacci taken on the impulse leg, which is a quite strong retracement zone from which most of the times the market does create a continuation to the upside. So at the moment here on the monthly time frame, we are testing strong support and there is the possibility to see the market create a rejection to the upside. Going down on the weekly time frame, what do we have? Now here in the weekly, we can see how this market has just provided an overextended M formation. We can see in fact that the market created first a move to the upside, move back down, move back up, and then the move to the downside, basically creating this M pattern. Now, generally speaking, after the creation of an M pattern, what you expect is for the market to provide a move to the upside to go and complete the M pattern at the previous support turned resistance. So here in the weekly time frame, there is definitely the possibility to see this market create a nice move to the upside to go and complete the pattern at this previous weekly support, which, now that the market has broken it to the downside, is turned resistance. Going down on the daily time frame, what do we have? Now here on the daily, we can see how the market at the moment is quite overextended to the downside. We have just seen a strong impulse, and after an impulse, you expect the market to provide a correction. Now, if we look closely, we can see how the market here has just provided a double bottom. Now, usually after the creation of a double bottom, you do expect the market to provide a rejection to the upside. And if the market here will actually provide this move to the upside, what we will also have is the creation of a W formation. And as you know, after the creation of a W formation, what you expect is for the market to provide a nice move to the downside to go and complete the pattern at the previous resistance turn support. Meaning that if here on NZD USD we will actually see a move to the upside after the creation of this W, we can be looking for a nice shorting opportunity. If you have any requests for other breakdowns, make sure that you leave it in the comment below and also make sure you like and subscribe. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, and we check the data for the NZD, what can we see now? First of all, there is a very important thing that you need to know. If you check the data for the NZD, you are not actually checking the data for the NZD because all currencies on the spot are traded against the USD. So if you're checking the data for the NZD, you are already checking NZD USD, which is, by the way, exactly what we need to check. We need to check what we have on NZD USD. And if we check it, what we can see is that with the last report, net positions went from 17K to 4K, meaning that institutions and the non-commercials in the market, so the biggest speculators in the market, the big players in the market, are shifting their positioning to the negative side of NZD USD. And that is clearly already reflected in the price action. We know that this market has been melting to the downside. And what we can see is that with the last report, they have even added 1.6K short positions, reaching 15K shorts and 20K longs. So longs are getting decreased from 32 to 20K, and shorts are getting increased from 11 to 15.6K. So the NZD is getting quite weak, meaning that if we will actually provide this W formation, there is a very high probability that we will actually complete it at the neckline. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a 4-hour and lower bullish market as we will have to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market at that point, we will be adding NZD USD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is this previous resistance now turned support here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.